You can win 70% of your trades but still lose money. Maybe you already have. Most retail traders right now are obsessed with win rate. If you go on Google right now and search how to start day trading, you're going to be bombarded with indicators and gurus talking about this is my indicator I use to get a 95% plus win rate. This is how I print money. This is like the indicator which is never wrong. In this video, I'm going to show you the actual numbers which decide whether your account will grow or whether it won't. You won't find this information on your brokerage application, and you definitely won't find this information on any other YouTube channel. Every platform, every course, every ad are selling you the 90% win rate thing. That's what is meant to make you feel good, because humans by nature don't like admitting their mistakes, as do I and as does anyone else, right? Here's the math. Assume a $10,000 account, okay, and assume a 70% win rate, which means that out of 10 trades, you win every 7 trades you actually place, and you lose 3 of them. But on every winner, if you make $180 and say on a single loser, you lose $620, you completely wipe out your account. These aren't really fake numbers. This is actually how selling options actually works. And on YouTube, you're really just bombarded with information about selling options and running the wheel strategy, selling options for passive income, always be making money, right? Selling options is the reason why most people completely annihilate their brokerage account, just because you lose so much way more money if you're wrong, okay? It's like you can be right 7 out of 10 times, but the times you're wrong, you totally wipe out your entire account. And on top of that, if we start overlaying brokerage commissions and, overtrading, which is a real thing, where like if you lose money, you want to get that money back, so you overtrade. If you overlay your brokerage commissions and overtrading on top of a losing system by default, you stand absolutely no chance of making money, which is why a 70% win rate or a 90% win rate, which is advertised to you so much on YouTube, is a total scam. You're literally playing a game in which you're like designed to lose. If you actually decide to start selling options for income, you will lose by default. So if you find yourself in positions where you lose way more money than you actually make, and you're actually sick and tired of, how do you actually fix this? Well, the answer is simple. You want to start trading in such a way where your win-loss is closer to 50-50, as is most professional traders on Wall Street. You want to get to like 50-50 odds, but you want to engineer situations where if you're right, you make a lot of money, okay? Now, if you want to engineer strategies like that, and you want like a full process of how do you actually do that, and how do you actually get away from like losing so much money in a losing position, book a free call with me. That's where we discuss how do you actually make outsized returns and put the odds in your favor. And it's counterintuitive, because one would think that like a 90% win rate would make me more money than a 50-50 win rate, right? That's not how it works on Wall Street, and that's not how professional traders run their book. The only question which really matters is how much do you lose when you're wrong, and how much do you make when you're right, okay? I'm sure you guys must have definitely heard of Stanley Druckenmiller and George Soros, right? These guys took like a lot of trades in their portfolio, but at the end of the day, it was really just like 3 winners which drives their entire portfolio, right? There's a common saying in the financial markets, right? I think it's by Michael Platt. He's like a crazy trader. He's like managing like $30 billion. So this guy said that like 80% of your wins come from 20% of your trades, okay? That just means that by default, you only make a lot of money on a few hand-selected trades. So technically, your win-loss, like, it doesn't even matter if it's 50-50. Like, the odds can be anything. You just need to be structured in such a way where if the thing happens to move big in your direction, right, you happen to make a lot of money in that situation. That is the opposite of selling options. That is actually buying options. You want to be buying options, and you want to be buying options which are slightly longer dated, not weekly expiries. That is really how professionals do it on Wall Street. And if you actually want to learn how to implement these ideas and actually know how do you actually fit in long options in your current book, where you actually put the odds in your favor versus losing so much money when you're wrong, book the free call and we're going to talk all about it. There's no Wolf of Wall Street type stuff. We're literally just going to go over your positions and how you can structure them better.